Welcome back to Growing Quality. My name is Elian, and in this video, I'm going to give you my opinion on the Rivian delivery numbers. Now, I also want to talk to you about my opinion of the current state of the markets, and at the end, I got a nice announcement to make. But before we do that, I want to take you through my portfolio and see if there are any updates going on there. So let's dive straight into it. Now, if we look at Enphase, we can see that at the beginning of the week, the stock traded down at first. This was due to bond yields rising as the 10-year Treasury went from 4.2% to about 4.4%. Now, as we can see, it exactly where this happened. And then here on Wednesday, bond yields started ticking down again. And that's where the stock also started to recover. Now, we also had news on Enphase, and that is that the chief commercial officer will be stepping down. And I think this is not great news because it's giving uncertainty to the stock. But he is stepping down on June 30th, so Enphase does have some time to look for a replacement. As we go to Ferrari, there isn't really much going on with Ferrari. We do have Barclays downgrading the stock to equal weight from overweight, but as we can see, this happened yesterday and it didn't really have much of an impact on the stock. However, what did have an impact on the stock, or what is having an impact on the stock, is the uncertainty whether the Fed will cut rates or not. As we can see also with the rising of the bond yields, the stock has been trading downwards and it's down about 5% over the last week. Now, this same issue is happening at Monday. And as we know, Monday is a small cap. Small caps are more susceptible to the bond yields and to interest rates as they are more dependent on the cost of capital. Now, why I'm not looking so much into the decrease of Monday's shares or Monday's stock is because Monday has no debt. They have about $1.2 billion in the bank. So when yields increase, that also means that they get more from interest income. Now, we can also see on Monday that on Wednesday the stock recovered as bond yields came back down again. But unfortunately, yesterday there was a sudden turn to uncertainty in the market, and this has been taking the stock down with it. If we look at Moody's, it's flat for the week. It was actually trading up yesterday because, as we can see here, Moody's named Atsi Shet as Chief Credit Officer. So if we just look at her resume for a second, we can see that she's been with Moody's for a long time. And she actually started there already in 1997 at the Credit Policy and Sovereign Risk Department. And she left at 2006 to become a chief economist at Reliance Capital. And after that, she joined Moody's once again, working her way up to now being chief credit officer. So as we talk about Moody's, we also have to talk about S&P Global, because for me, these both trade hand in hand. So I also try to name them as much as possible together. And S&P Global launched an offering to benchmark AI services. The press release said that Wednesday, S&P Global has launched S&P AI Benchmarks by Kensho, a service that evaluates and ranks the quantitative reasoning abilities and expertise of large language models in the business and finance sector. S&P said the service will offer accurate and reliable assessment of LLM applications for financial professionals. S&P Global acquired Kensho in 2018. Okay, so what do I think of this? I like it. I'm not sure how much it will add to S&P Global, but just like with PayPal, I like it when these companies do small add-ons and just throw them on the pile of value-added services. Or maybe they can monetize this or actually monetize this as a standalone product. And in that case, even better. Okay. So from S&P Global, we go to PayPal. And PayPal is down 3% last week. And this is something I'm noticing because I think that PayPal is increasing the strength. I can see strength coming into the stock because on down days, PayPal starts to become more stable. It used to be that on a down day, say the market was down 1%, PayPal was always down more. And this has stopped being the case. We can see that on down days, PayPal actually starts to become somewhat more stable, and recently even having some basically flat days as the markets were red. And I think that's a huge positive, of course. But besides that, PayPal also had a small press release saying that Zoom now supports payments in the company's stablecoin. So PayPal Holdings said Thursday that its cross-border money transfer service, Zoom, will now support sending payments through the company's US dollar-denominated stablecoin PayPal USD. PayPal, which introduced the stablecoin in August of last year, said Zoom users will be able to send US dollar converted from PYUSD to recipients in approximately 160 countries globally. I think this is just a tiny thing. The stablecoin is also very small. It's, it doesn't add that much value to the company right now. But as I said with S&P Global, and as I'm saying with PayPal now with this, I think it's a very nice thing. And well, I'm not going to call it an innovation, but a small add that can just be thrown on the pile of things they are adding and adding and adding. And certainly in the case of PayPal, this is what has been lacking in the last few years and what we see more and more of in more recent months, weeks. The company is trying to do a lot of tiny additions to its offering, and every tiny addition just adds on and adds and adds and adds to the overall product, and just it keeps moving in the right direction. That's what we're seeing with PayPal right now, and I find this another one of those examples. Just a tiny step forward, but many tiny steps make one big step. Okay, so then we go to Rivian. Rivian is down 7.5% last week. How can this be? Well, Rivian has released their delivery numbers, and I really, really like them, but we're going to go into those a bit later. And what else has been happening? Rivian has also been bought with the bond yields, but then we also had a very nice positive release from the CEO, from RJ. Okay, so what we can see here is a news article that says Rivian CEO RJ is hitting six-figure production mark even as the stock languishes. Rivian Automotive CEO RJ on Wednesday said that the company has reached the significant milestone of producing its 100,000th vehicle. So what happened? The CEO posted a picture of the vehicle, a white Rivian R1S SUV on X with the caption R100,000 Rivian. So the article continues. The R1S is among the first production vehicles from Rivian, and the vehicle starts at $74,900, about $5,000 higher than its pickup truck counterpart, the R1T. The article just continues with talking about the deliveries, but like I said, I will go and dive into that in a second. Okay, so that was it for the portfolio update. But as we can see, many of the stocks are actually down over the past week. So, like I said, Rivian is down 7.5%. S&P Global is flat. Moody's is flat. Ferrari is down 5%. Enphase is basically flat. PayPal minus 3.5%. And Monday also down 5%. So, how can this be? And what do I think about it? So basically, I already told you that at the beginning of this week, bond yields started rising. But there's a reason they did so. And that is that there's more uncertainty coming into the market on whether the Fed will actually cut rates or not. And some Fed officials are now signaling that they may actually not cut interest rates. This is also what happened yesterday. So let's take a look at this article. So here we have it. and it says hawkish Fed voices lead to market slide. It's possible Fed won't cut this year if inflation stalls. Now, this was a quote from yesterday from Neil Kashkari. And right as he said this, well, you can just see it in the charts. Everything started to sell off. Everything went from nicely being positive to being down deep in the red. So, the Federal Reserve appears to be more concerned about inflation than previously anticipating, according to statements made by several officials on Thursday. This follows assurance from Fed Chair Jerome Powell, who stated this week that recent inflation figures did not materially change the overall picture and that it will most likely be appropriate to begin lowering rates. So we have two sides here. Or one side starting to say that we may not actually cut interest rates this year, but then we have the chairman, Jerome Powell, who said that they will. Fed speakers then hoped on rate cuts, chill markets. Richmond Fed President Tom Barkin intervened on Thursday, saying that the early 2024 data is less encouraging. And this is true. From January and February, the data we have been seeing is not great. It's not ideal. Raising the issue of whether the outlook is shifting, the official said that it is smart for the Fed to take time on interest rate cuts. And this is also what Powell has said already. Earlier this week, he said that the rate cuts will most likely be happening later in the year. So they are shifting the point at what they plan to do interest rate cuts. Because markets were already at the beginning of this year, remember, markets were planning in 6 rate cuts. Now it's 3, maybe, possibly none. So markets are shifting there, and I feel like it's making markets a bit antsy about what's going to happen. The most notable change in tone came from Chicago Fed President Austin Goolsbee, a predominant Dove on the Fed's board, expressing significant concern about housing inflation. Goolsbee warned that failing to address it could pose significant challenges to achieving the 2% inflation target. Well, housing inflation has been a problem for 2 years, so that's nothing new here. Yeah, we know that housing is lagging and that it's been difficult to get it down. But as he says, I had been expecting it to come down more quickly than it has, Goolsbee said, adding that the biggest danger to inflation picture is continued high inflation in housing services. Goolsbee rejected the idea that recent inflation data were just a temporary, indicating that they cannot be disregarded as mere noise. Echoing a more hawkish stance, Cleveland Vice President Loretta Mester doubted that this year's pace of disinflation would match that of the previous year, advocating for additional months of data to assess inflation trends. Minneapolis Fed President Neil Kashkari acknowledged penciling in 2 rate cuts for the year, but questioned the need to ease monetary policy if inflation remains sideways. Okay, so just to answer the Loretta Mester argument here, we know that the last part would be difficult. This is what has been continually signaled by Jerome Powell as well, that the last part of inflation would be not as easy as the first parts. So this should be nothing new. What has also been said is that they don't need the 2% inflation as a definite, as that's where we're gonna stop, or that's where we're gonna start cutting rates. They need to see a definite move towards it, as they are very close, in order to cut rates to ease the point where they think they can make it flatline at or around 2%, not that it will jump back up. So as this news came out, and mostly the comments from Neil Kashkari, this is what happened to the markets. So we can very clearly see that the comments is what made the market crash. Now, today we will get unemployment data, and the unemployment data will either support the theory of we're not going to get any rate cuts, which would mean that investors and traders will price in the opportunity of no rate cuts, which would mean markets tanking. or the unemployment data will tell us something a bit more positive, that rate cuts are still on the table, which is what the markets want. Now, if you ask me, no rate cuts is actually a positive because that means that the market is doing very well. The only problem is that if it shifts too much to that side, is that the markets may actually be in troubles. Because if inflation is ticking up again, and if we are seeing a move back towards what we have been having in 2021, that's how we will eventually do have one of those hard landings, which up till now has been not the case. Okay, so then let's look at the Rivian delivery numbers because they came out this week. And although the stock has been selling off, mainly what I think due to bond yields, but the stock has been selling off as the numbers were announced. But I'm quite bullish on them because as we can see, the company delivered basically 13,500 vehicles for the quarter. And I think this is very good. Now, they also mentioned they produced about 14,000. And again, I think that's a good number. But why would I say that that's such a good number as the market seems to be disagreeing with me? Well, that's because of this. During the Q4 2023 earnings call, the CEO, Claire, said that they expect deliveries to be down about 10 to 15% from Q4 2023. So, okay, that's fine. What were the Q4 2023 delivery numbers? I will show you. So, in order to make my point here, I just took this table, which is coming straight from my video that I released last Wednesday, which goes into my full analysis of Rivian. And as we can see here, 2023 deliveries were about 14,000 vehicles. So take 10 to 15% off of it, we will get 12,500 deliveries. We are 1,000 deliveries above it. So I think that's positive. Now, the stock market might not agree with me, but I can add to my point by pointing you towards BYD or Tesla deliveries. And with Tesla, their production was fine. They have been stating a lot of excuses as to why the deliveries were not good, but all those excuses go for the deliveries. Having a factory shut down makes you have problems with production, not with deliveries. So, as you are seeing, Rivian does deliver their vehicles, and I'm not saying they are better than Tesla, but I do think the company has less problems than Tesla and than many other EV players. And I have a reason for it, and that is that they have or try to have a brand and that they try to be unique and stand out between the offerings. But once again, if you want to know more of why I like Rivian, just check out my video from last Wednesday. It will be linked somewhere up here. And I try to be as objective as I can in the first part of it, with just giving you the numbers, how the company is doing. And at the end, I give my opinion on whether I like the stock or not. Now, in order to close this video off, I want to show you something I am working on behind the scenes and give you a small teaser of what I plan to release. And that is this. I plan on making all my videos or all my videos on stocks into a newsletter, which I plan on releasing together with the vehicles. Now, the newsletters will go even more in depth than I can do in my videos, because highlighting things from the balance sheet or from competitors will be a bit difficult to do in my videos. Now, it is something I'm currently still working on and working out the technicalities behind it, but be aware that it is something that is coming. And if you're interested in it, just let me know. Give a comment beneath the video or send me a private message on X. My link to my X profile is in the bio. So just let me know if this is something you're interested in, if maybe you want to be on the mailing list or email list. And I'm excited to see how I can make this and make it to the most value, because I think a lot of people want to take more time into doing research into the stocks they like, but they just don't have the time or don't really know where to start. And I want to be of help on that part, so you can make your own decisions with the help of some good research. Now, thank you for watching, and I hope to see you next week. As on Wednesday, I plan to release a video going over my analysis of NFIX.